Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I have Nikesh Desai, co-founder, CEO of InvestingChannel. Nikesh, welcome to the show.
Thank you. Thank you for having me.
All right, Nikesh, how did you identify a void in the market that could be filled by the business model of InvestingChannel?
Yeah, so really quick, my background is financial services, investment banking, startup world, ran business development at thestreet.com. And after I left there, what was pretty evident that was happening in the marketplace was there was this proliferation of blogs, people writing about passion points and interests. And in that process, this was early 2000s, mid 2000s, a lot more of the audience was dispersing versus just going to a Yahoo Finance or Market Watch. They were going to sites like Zero Hedge or Silver Doctors or Kitco or Bar Chart, where they're getting really niche, high value content. But while that dispersion started to happen, it made it even that much more difficult now 10 plus years ago in the technology at the time for advertisers to really hone in and target their retail or institutional investors. So long story short, with the proliferation of blogs and the dispersion of users and where they were reading their investment content, that basically gave us the idea for InvestingChannel, where there was a bunch of these high value niche investing sites writing about ETFs, macroeconomic trends, equities, commodities, where they weren't getting the types of brands that we could really bring to the table that would better monetize their site. And on the flip side, provide a more engaged potential customer to a TD Ameritrade or a BlackRock, as an example. So it was really that proliferation of content and dispersion of users that we identified and started the basis for InvestingChannel.
Okay. Now, as you took it from there to where you are now, let's describe the uniqueness of InvestingChannel so people get a better flavor for it.
Yeah, so fast forward to today, we reach about 20 to 25 million retail to institutional investors. And in the end, we've got two constituents to serve: the publisher, who we're managing their entire ad inventory for, and the advertiser, who is looking for a retail or institutional investor. And so on both ends of that, what is it that makes InvestingChannel unique? One is the nature of the publishers. These are high value niche sites that, quite honestly, many brands don't know about, or those individual sites don't have enough reach to talk to a TD Ameritrade. So the kind of uniqueness there is our ability to aggregate and find these high value audiences and sites where we are the exclusive kind of representative of all of that inventory. Layered then with our technology and data. In the end, what our technology allows us to do, most importantly for our advertisers, is to understand that site's particular audience and the intent of their audience. To give a specific example of what makes the advertiser side more unique, when you go to a travel site and you're reading about Hawaii, you pretty much know the intent of that user, and you're going to start pushing them, flights to Hawaii or hotels to Hawaii. But if someone is just reading about what happened in, Facebook's earnings, you don't have a sense of what their intent is. Are they willing to buy research? Are they willing to open up a brokerage account? Are they going to invest in an ETF, right? And so we've built a lot of technology to help support understanding that audience and intent of that audience, which then makes what we provide back to our advertisers truly unique.
So can we drill down a little bit into the long tail side of this? Because there's more to it than what we've been able to talk about so far.
Yeah, any specific direction there on the long tail side? I think just broadly speaking, the concept of long tail, for those that may not know, is that, look, there's the short tail, call it the major media companies out there, and the long tail of all these high value niche sites that, as I mentioned earlier, might only be writing about ETFs. I have a site that literally reaches 50,000 unique users only investing in silver. So there, at the same time, you have kind of really kind of smart, intelligent writers who are ex-hedge fund managers, professors of economics, economics ex-bankers who are writing about these types of subjects that kind of make up this, so to speak, of long tail. And one of the things I didn't mention earlier that exists in the long tail but also makes us unique is when you look at the overlap of our unique users with mainstream short tail media, right, a Yahoo Finance or even a Bloomberg, the overlap of our unique users and their unique users is less than 50%. So what does that tell you? If you're a brand or an advertiser, to spend money in the long tail means you're getting in front of 50% of the audience you wouldn't have otherwise been able to if you were just working in the short tail environment. So it's been a real education over now 10 years since I started this business, but brands completely get it that if they're not spending in this quote unquote long tail environment, they're effectively missing about half their audience.
That's the part I wanted you to bring out and to make sure that we got that message out. Going forward in the future, what are your plans that you'd like to, don't let all the secret sauce out, but where do you want to take InvestingChannel as we go forward in the future?
Yeah, no, I think in some ways it's more the same, but there's this whole data side of the business that I'm particularly interested in. So I'll kind of break those two things out. In terms of more of the same, I think there is getting to a level of personalization is getting more and more possible with AI, which yes is a buzzword, but we're moving to a point of not just kind of understanding intent, but predicting intent of that user. So for us, getting smarter and smarter in how we target the right context at the right time to the right person is what we're really building on the technology side. Mm-hmm. And that only makes the spend for our advertisers more efficient, but the value the publishers get back much higher. I think what goes hand in hand with that is making sure that we are dynamically working with the creative of the advertisers to also take advantage of that predictive quality. Because if the creative remains stale, it doesn't matter how much time and effort we put into understanding that user. But for us, getting a lot smarter about personalizing that message is important, which also combats what's happening in media between kind of ad blocking and fake news and the viewability of the ad and programmatic exchanges tapping into inventory. You've got to differentiate what you offer as a publisher, and it starts with, I think, getting down to a level of personalization and understanding the intent of the user. But that's kind of a little bit more of the same in terms of adding more publishers, more advertisers, and enhancing the targeting capabilities, where we're kind of spending a good part of our research dollars into is on the data side. And what I mean by that, there's companies like Weather.com or even Henley Wood, real estate media company, where we thought of them as traditional, quote unquote, traditional media companies, but they have big data businesses, and it's kind of come out from the media side. So I've spent a lot of time understanding if a hedge fund manager is on my site or network of sites, or if they manage $500 million, and in doing so, I also know what, anonymously albeit, I know what these financial professionals are doing or researching in real time. And the indications of what these financial professionals are doing is high value to other institutions or even to create paid content around, right? As an example, we're testing out something right now where we literally are just looking at the top 10 most read searched tickers across our network of sites by financial professionals. And you see very specific interesting trends on an hourly basis, let alone on a weekly basis, on what people are researching in the moment. And that's an indication of, of the markets moving one way or the other effectively. And I think by looking more and more at that data set, because we've spent a lot of time identifying audiences, but creating paid content around it is a big area that we're exploring.
That sounds like it's going to get really granular, so you're going to be able to have ads placed that fit the search trends that you're coming up with. In your experience, how granular do you really need to do to actually end up being effective on the ROI to the end advertiser?
Yeah, well, so that's a great question. What I'm talking about, though, is almost independent of the advertiser. My business is 99% ad-based. This data side allows me to create a paid content subscription business, selling it to hedge funds and institutions who want that API of understanding of what their peers are doing. That might give them indications of how to trade or what not to trade. However, and that's where we have to get pretty granular, because they literally might only want to see what's happening in the commodity. It's based on their trading style. They might be only trading commodities, and that's the only part of the feed they want for an institutional paid content product. However, if you're talking about the advertiser side, really the core business that we've built, we're getting pretty granular. I mean, you look at the two sides of our business. It's the retail investor and financial professional. On the retail side, they want to know, are they interested in retirement? Are they a self-directed investor? Are they looking for an advisor? Are they reading and researching currencies? So we'll get to that kind of level of depth. But layered on top of that is, are they in market, right? That goes back to my comment of having intent and figuring out, okay, if they're interested in options, great, but am I gonna really buy this options research paper, right? So we get granular based on kind of the context they're in and defining the audience and the intent of it. But we're not getting to a point where I think we will on the institutional data sales side, where it's really finite what that client may want that gives them trading signals effectively.
No, I'm probably not as deep in this as you are, but it sounds to me like you're really on the bleeding edge of being able to kind of take over this industry sector that you're in.
Well, look, we thank you. We hope we're on that edge. I think about the financial media vertical as a whole, and there's two parts of it. There's the investing side, which we play more in, and then the personal finance side. We're not really on that kind of credit card, home loan, insurance side, but we're more on that retail institutional side. And there hasn't been a lot of innovation in our vertical in a while, and our mantra is to be that the largest financial investing marketing platform out there. And I think we have done a great job on the advertising side and working with major online brokers and ETF issuers and investment research firms to acquire customers. But I think where we have an opportunity to really scale our business is on this data side. And I think that's kind of where we differentiate versus some of our other competition, where it's been a little bit more traditionally ad-based or selling a kind of a retail subscription product, which is kind of a churn and burn world. There's a lot of value in all these financial media businesses in understanding what is moving the markets, right? That data does exist across this spectrum of sites, not let alone in the long tail, that I believe has yet to truly be harnessed. I mean, the only analogy I can think of is the sentiment at some level that you get from Twitter. There's a lot of companies that are analyzing that data to figure out, hey, is there a signal in here? And that is very interesting, but that's only one part of a signal you can get online based on what individuals are doing. And I think the differentiator for us is we can really group individuals based on kind of who they are, as a financial professional, for example, or an active trader. And that gives you another layer that really doesn't exist out there.
It seems to me you're also able to serve up references of content that are linked to the searches that are going on. Am I correct?
Yeah. So exactly. That goes to, we're not where we want to be long term, but that goes back to that ideal and next phase of what we're doing is personalization. So, at some point, not only the ad itself, but the content needs to marry much further with the understanding of the profile I built on that cookie, right? That person in the moment. That perfect storm for us and in the industry isn't quite there, but that's definitely where it's going. But yeah, we've done, I think, a great job on marrying the brand to the content, but you want the content and brand to start coming together, and that's what we're trying to work on.
Got it. Nikesh, unless there's anything else, I think we've covered a lot of ground today.
No, look, Mike, appreciate the time and opportunity, and look forward to chatting again.
Me too. All right. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.